Good morning, trading world. It is December 8th, 2022, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook: Open interest builds over the range as odds increase for a gamma squeeze. As we cycle back and forth through the same range, open interest builds, increasing the chance for a gamma squeeze. I heard a lot of people talk about the market being like a coil spring or a spring compressing up for a big explosive move. Let's look at this from a quant side. I mean, it's easy to see over the chart that we've had this range over the last 2.5 to 3 days. Basically a 5-point range between 395 at the top all the way down to 390. Now, let's take a look at how open interest has built up in this area. We can do this one or two ways, and I'm going to bring in the option chart and then I'll bring in my spreadsheet. All right, here's the option table, and looking at that 395, just look at the strikes at that 395 on the call side. You see the huge amount, and we're on Friday's expiration, but you can see the huge amount of open interest. 22,387 is the amount of open interest at the 395 level, and then you could go down to the 390 area and you can see 20,300 and something in open interest on the call side. And even in between that area, though those are not small amounts, but focusing here, those are pretty large amounts. Now, even on the put side, 395 strike, you have over 25,000 in open interest. Down to the 390 area, you have over 34,000 in open interest. So that's looking at Friday's expiration. Now, I'm going to bring in my spreadsheet. And with my spreadsheet, this is today's expiration. It's not, even though we have an expiration every day now on the SPY, I still hold a preference toward the major expirations, which were the original Monday, Wednesday, and Friday expirations. But just in looking at today's open interest, there's something that I want to focus on, and it's here at the bottom: the amount of call open interest opposed to the amount of put open interest. And you can see how that outnumbers, how the calls outnumber the puts as far as open interest. So it tells me that we are really looking at a gamma squeeze, potentially to the upside. Now, as thousands of positions are built in this area. This is the literal compressing of the spring as open interest builds from going back and forth in this same range. Now, an event like a big data report, an options expiration, or a combination of the two can be the key to releasing that spring to jump. And this can also be seen technically in the charts if you know what time frame to focus on and when to focus on it. So this seems to be the exact situation coming into Friday's expiration, which is why I did enter into a couple of bull put spreads yesterday. I did mention, like it wasn't much that I was looking for in this market, but I did mention yesterday that if the market got down around a certain area, I would be looking to do some bull put spreads to kind of take advantage of a bull move that could possibly come. If you remember, one of my key rules is that I like to go long on down days. And if I'm looking for shorts, I like to look for shorts on up days. So keep in mind that there is a high probability that we will revisit the lower end of the recent range again before completing the gamma squeeze. And I'm kind of looking for this to kind of happen overnight and during the pre-market for Friday. So this brings us into the key levels for today. Give me just a moment while I bring those up. And here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 394 to the 395 area. Queen resistance is 396 to the 397 area, which this area will hold a lot of weight. I'll be looking for the signs or starts, the starting of a reversal somewhere around here at that queen resistance level. And then we have our king resistance level at 398 to the 401 area. On the support side, we have our jack support at 393 to the 392 area. We have our queen support 391 to the 390 area, and then our king support 389 to the 388 area. And I'll be looking overnight for a revisit somewhere down here to this queen, possibly even the king support area overnight. So one of the strategies that I like to do when I'm looking at something like this, I like to break the legs on my put spread. So I'll definitely buy back once we get somewhere up here and I see the indicator that I'm focused on, and if I see that change or reversal coming in that indicator, I like to buy back the short side or the short put in that spread at resistance, and then wait until we go back and revisit the lower end and buy back or sell the put, the long put then. So that's a strategy that I like to do in these type of setups. The main thesis for today, it is bullish, closing above the 393.16 with a projected target high of between 394 and 399. Our alternate thesis is bearish, closing below the 393.16 with a projected target low of between 393 and 388. Again, the weekly outlook is bullish bias with a possible retracement of 403. The monthly outlook is bullish bias with a possible retracement back down to 394. The current major channel we are in is 397 all the way down to 379. The major channel above is 397 up to 416. We have somewhat harmony between the technical side, which is bullish, and the quant side is actually 50-50. That 50-50 quant side tells me to look for more of an even range day, even if it takes the overnight hours to complete. That brings us to the scenarios of the day. All right, here we are with the scenarios of the day, and our first and most probable scenario is going to be our expanded range day structure. We can have an initial fade and chop sideways to up, find resistance once or twice before consolidating, then reversing and starting a down move. So this is our expanded range day structure. That down move may not be prevalent until later in the day or closer to the close. So be on the lookout for this, and some people may look at this consolidation at the end of the day as a time to get long, but this would be too dangerous at the end of the day, knowing the drama that we may have pre-market. So again, that's our expanded range day structure, and let's bring up the next scenario. All right, our second scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find midday chop around either the queen or king resistance before going back down with the same energy or force we went up with the first part of the day. Again, that is our rounded reversal day type structure. Our last scenario is going to be our trend day up. We open gap up and start with a big fade back toward the previous close, represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We usually find midday chop around either the possible queen or king resistance. Not all the time, but a lot of the times on a trend day, we usually start the second part of the day with a head fake, looking to continue the primary trend of the morning before turning around and doing some type of fade into the close on a trend up day. So those are the scenarios that I will be prepping for. Please be very careful. Even if it is a trend day today, you have to kind of figure a lot of that move has already been done in the overnight session. As always, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have in each position, and we manage that risk in accordance to our account size. I hope this helps, kind of going behind and seeing the different way to look at the coiled spring analogy when it comes to trading. From a quant side as opposed to the technical side. Just trying to kind of give you different ways to look at things, because I like to verify what I see. I'm not I am a majority technical trader, but I like to verify what I see by understanding and knowing the quant side as well. So again, I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.